Hi guys, John the Quant here. Today we are going to look at TA-Lib, that's the Technical Analysis Library, and we're going to see how easy it is to calculate technical factors in Python. So first off, technical factors or technical indicators are calculated using only past prices, and that's what makes them special. Traditional market theory tells us that past prices can't be used to predict future price movements, but there are plenty of purely technical analysts, pure technical traders that prove that theory wrong. Technical traders are also called chartists because they spend a lot of their time looking at charts. And technical analysis isn't really that hard to get started in. And so I think that's why I personally have seen a lot of increased interest in candlestick charts and patterns and things like that on the internet lately. Now, I am not a technical chartist. I think technical indicators have predictive power, but I think there's also a lot more to it than that. And I've decided that I am not going to rigorously explain the indicators that we're going to look at today, but I will show you where you can learn more about them. All right, so let's just go over to Colab and get into it. All right, before we actually go into Colab, we're going to have a really quick look at the TA-Lib website, TA-Lib.org. Technical analysis library. It shows that it can use candlestick patterns, and it's got an open source API for C++, Java, Perl, Python, and .NET. We of course are using Python because that's what I like. And there's over 200 indicators, and we'll look a bit more into these in a little while. Let's go to Colab now. Here we are. This first cell is all the stuff you've got to do in order to install TA-Lib. You've got to download the file, unpack it, do all this other Linuxy stuff, and then you can install it just using pip install. And I also needed to upgrade the tables package, and that has to do with the HDF store function from pandas, I believe. So we're going to use pandas, we're going to use numpy, TA-Lib, like I said, of course matplotlib and seaborn, and we're going to filter warnings. Now hopefully you guys watched the video where we downloaded and saved all of our asset data, because we're going to be using that a lot, and I'm going to load the SP500 prices table from that H5 file. And I just want to talk about Apple today. So we've got Apple's high, low, open and close prices, as well as the volume. Now a quick look at Apple close. You can see we're going from the beginning of 2009 through the end of 2020, and we're missing a value right there at the end of 2008. It's the only missing value, so we're just going to drop it, and that's fine. Beginning of 2009 all the way through the end of 2020. Now the first indicator we're going to look at in TA-Lib is Bollinger Bands. And Bollinger Bands, we really have two parameters that we can set. First, it's the time period on the moving average and rolling standard deviation, and then we can choose how many standard deviations away from that moving average we want to kind of set our upper and lower bounds. I chose 150 period for the moving average, and 2 standard deviations up or down. And then it's real easy. It comes out in an upper, mid, and lower, where mid being the moving average. This is 2 standard deviations up, and this is 2 standard deviations down. And we can just plot that. And look, there you go. It was super simple, right? One command, you've got Bollinger Bands going the whole way. Now, if we were going to use these for trading, we would say, let's look at this right here. The price moves outside of the upper Bollinger Band, and so we would say, oh, that's too high, we expect that price to fall, so we would short Apple stock there, and depending on when we sold, which hopefully we would tell it to sell when it gets back to the median, or possibly even we would just keep holding it and hope that it went lower. We may or may not make a profit off of that one. Going the other way, when it hits the when it comes back in from the bottom, we would say, ah, yes, this looks like it's about to go back up. So we might go long here, and we could make a profit from that one pretty well. Next one, the relative strength index, and this is a momentum oscillator. All right, so it only really has one parameter. That's the time periods that you're using. RSI is kind of like predicting the percentage of the time that the price moves up or down. and we'll plot that down here. You can see with the lines. Traditionally, all right, so RSI is limited between 0 and 100, and traditionally we would say that a asset is oversold when it hits 30 and overbought when it hits 70. So overbought means we expect the price to go down. So whenever this RSI goes above 70, we might consider shorting Apple stock. And when it goes below 30, we might consider buying Apple stock, because it's probably a good deal then, and we expect the price to go back up. Now, you can also treat RSI as though it were like a price series. Using technical analysis, you can look for the head and shoulders, support and resistance, and all those different technical things. Again, I'm not a technical chartist, and looking here, I don't see anything that really strikes me as being indicative, but I will say that it hits this 70 line, which 70, if you remember, says that it should be overbought. We would expect the prices to go down every time it hits the 70. It hits that a lot. So in this case, you might consider moving, because it's kind of an arbitrary bound, you might consider moving it to 80, just to make it happen less often. And therefore, if it happens less often, the thought is that it'll probably be more indicative. So let's look at this one right here. It goes above 70, or even above 80 if we had moved it up there, which means it's overbought, and we would expect the price to take a tumble right after that. So at 70, you can see it's right here, and we actually get a price movement up before it goes down. But if we had moved it up to 80, we'd get it further over here, and so we actually would do a better job of catching this downturn if we had shorted Apple at that point. And then right here, it goes below the 30, and if you can see, that's about there-ish. So it might be a loss if depending on where we set our stop loss, or we might actually catch a little bit of this upturn right there. And that's how you would use RSI. And again, super simple, single command from TA-Lib to calculate that. The last one we're really going to talk about is moving average convergence divergence, or MACD. It's another momentum indicator. And this one, again, single function, TALib.MACD. We're just using the close prices here. MACD takes two time periods, all right, because you need a short term or a fast moving average and a long term or slow moving average. And for the TA-Lib version, you actually need a signal period as well. So what this is going to do is it's going to say a 20-day exponential moving average for the fast period, a 60-day exponential moving average for the slow period, and the difference between those forms the MACD. Now, the signal period tells us to take a 15-day exponential moving average of the regular MACD, and it's going to provide that as a signal. And you also get the MACD histogram, which I didn't plot it as a histogram, which you're about to see, but I'm not, honestly, again, not a technical analyst, and I'm not real sure how the histogram matters, but I do see it a lot in plots. So down here, just plotting everything. Here's the Apple close price, and then down here, you can see the MACD. The green line is where the histogram would normally be. So that should normally be in bars. I just wasn't able to get that to happen. Then blue line is the regular MACD, and the orange line, the MACD signal, is the 15-period exponential moving average of the blue line. So it's just kind of smoothed out a bit. And the way MACD works is when it crosses over 0, that indicates bullish or bearish sentiment. So if the MACD is below 0 and goes above, you might consider going long in the asset. And if it's above and it goes down, you might consider shorting the asset. So let's look at, say, this one here. Look at this same hump. Right there, you can see the MACD and the signal. All right, they cross over the 0. So that's bearish. So right about here, we might consider going short in the asset. And as you can see, that would have paid off. We could have sold. All right, now down here, when it crosses back over, that means we expect the price to go up. So at that point, if we had bought, we would have been right. And that's how MACD works. Now, interestingly, MACD is not bounded. It can go as high up and down as it wants. But all that really matters is whether it's above or below 0. So we could actually, you can see how MACD is relatively small here compared to over there. We could actually divide all of those, and we're going to try this real quick. Divide all of those by the absolute value of the maximum. So absolute value of MACD and the maximum of that. And after we divide by this maximum of the absolute value of everything, we will still get the same indicator, more or less, because again, all we really care about, we don't need this one. We'll do it anyway. All we really care about is whether it is above or below 0. All we care about is the crossover. I cannot type. So let's run that and look at our plot again. Hopefully that smoothed it out a little, and it did. You can now kind of see what's happening with the histogram line. It kind of looks like the histogram line is talking a bit about the slope of the other. You can see when it starts going up, that's when the histogram, goes above 0. So it would be a useful indicator. It kind of tells you how fast the regular MACD is going up or down. And you can see a little bit more detail in this half whenever we divided it, but it's still crossing 0 at the same places, so it's all good. And down here, I just wanted to plot them all at once. I've got to zoom out so you guys can see it a little better. There you go. We've got the MACD plot right there. The Bollinger Bands. Whoops. Bollinger Bands, the RSI plot, and MACD, so you guys can see all of that. Now, I promised I would show you guys where you can learn more about this kind of stuff. And Fidelity's Learning Center actually has excellent resources on technical analysis. So this is what it looks like, Fidelity Learning Center. Down here, you can go to Using Technical Analysis. They've got all kinds of articles and videos on charting and technical analysis techniques that you can watch, and then under Advanced Trading Strategies, they've got the Technical Indicator Guide. And that just lists them. There are so many technical indicators that this is a great resource if you want to go find one. But let's say we wanted a volatility indicator and we want it to be an oscillator, because we like that. And there's really only one, and it's this one. The Chaikin Volatility. I've never heard of this. I did look it up before the video, but I had never heard of it before that. And it's going to take you to a page where it kind of explains how to calculate it down at the bottom, over here, okay? The exponential moving average of the difference between high and low prices, and so on. And it's going to tell you how to read it. What does it mean? Now, we know this is called the Chaikin Volatility. We know it's an oscillator, so let's go back to TA-Lib. Over here, 200 indicators, more info, and let's look for it. Chaikin. There we go. It's right here. I'm going to use this one. The Chaikin AD oscillator. What does AD stand for? I'm not sure. But it's fine. ADOSC. Let's go ahead and add a code down here at the bottom. That's wrong. Down at the bottom, add the code here. And let's make this real quick. Alright, so TALib.ADOSC. And let's see what we need. We need there it goes. We need the high, apple underscore high. What's the rest of it? Okay, we need the high. We need the low. We need the close. And we need the volume. Now, if you get deeper into this, you're going to find out that over here, it says that he recommends a 10-day moving average. And that's actually the standard. That's the default setting for this function. So we're not going to worry about it. But we are going to plot it. Let's do plot fig axes equals plot dot subplots. We want 2 rows here, but only 1 column. And we want the fig size to be pretty big, 20 by 8, to make it look nice. Now, then we want to plot the close price, why not, on top. And we want to plot this oscillator on the bottom. And let's have a look at that. There we go. All right, so there we go. This is what it looks like. You can see the apple closed as before. And this, look at this oscillator. It's really high up here, and then it goes down. And if you read this whole article on the Fidelity Learning Center about this oscillator, what this tells us is that at first, investors weren't really sure about Apple, so there was relatively a lot of up and down price movement. But further down here, whenever the volatility gets lower, that kind of means that we're matured into this bullish sentiment. So down here, price was going up, but investors weren't really sure, and if you think about it, that makes sense. Back at the beginning of this, in 2009, the first iPhone was still relatively new, and so I don't think most people really knew what to expect. Apple had kind of had not exploded yet in the way that it has at this point. So you can see that as the price of Apple went up, as it became kind of a business phenomenon, okay, the re-emergence of Apple, then investors got to feel a lot more comfortable with it, and so the volatility went down. And that's it. We saw a real simple, we saw 3 different versions, 4 actually, of technical indicators that we can do super easily in TA-Lib. You've got all 200 of them right here if you're interested. They've got even candlestick things like 3 black crows and stuff like that. All right, let's go back to in-person and just sign off. All right, guys, there it goes. That was our first foray into the technical analysis library. It makes technical indicators super easy to work with in Python, and it's generally a great resource to be able to work with. Again, I'm not really a technical analysis person. I do think that price movements can be used predictively, but most of the time I don't think it works very well. But hey, we are probably going to end up using that when we talk more about making trading decisions and stuff like that. So I'm glad we talked about it today, and I'll see you next time.